Back to the channel. So today we are going to analyze most of the asset classes related to Indian markets. So let's go ahead with Nifty 50. So right now I have this chart. Let me switch to this bar chart, and then so I like to explain it to you what I really feel looking at this chart. So yeah. So I at first I thought that this was really the start of the end of a corrective rally, and then from there we got this entire impulsive move. Fair enough, correct. Then an ABC correction move ended over here. Then we anticipated a breakout, but we somehow got a triangle. Then I started to label this as an X wave, and then I got this as an ending move, and thereby I thought that maybe we have completed A, B, C, D, E correction, and overall this entire move was to retrace this entire impulsive rally, which I thought was impulsive in nature. So now after that, after the completion of this correction, we traded this entire move from 23,000 to 24,000, and then it's a very simple assumption to keep that after we do an impulsive move, there is a small correction. We did that correction, and all the opportunities after that would be for long side or would be in the direction of an impulsive move. So we got this opportunity, and I personally traded this opportunity and this opportunity as well. This was exactly the day where I squared off all of my 24,000 and 24,200 calls, because there was some weakness, there was some divergences in the markets, and that suggested me that maybe the entire long move is really coming to an end. But then we dipped a bit, and my overall idea was that what if we just go down 200 points towards 24 250 300 levels, and then that would just be wave 1 and wave 2, and then we would start a rally on the higher side towards 25,000. So that was my overall view, my overall counts on Nifty, but that didn't really play out because of the news regarding the the geopolitical risk in Iran, and that just gave a 500 550 points of down move, and that has just distorted the entire chart. So now I am left with this only count, that I have to label this as an A wave and this as a B wave. Okay, so A wave and B wave, and this move as wave C. So now when I do this, then I there's no easy way of saying this, that whenever we complete this ABC correction, you tend to anticipate that from the level from which you started this entire move, which was from 23,000 level, you come back to that level and you test that level once is is what textbook teaches us, right? So maybe there's a possibility that after this strong down move of what, almost 24,500 till 23,800 500 200 250, like 750 800 points of down move, that would just be wave A, and this could be wave B, and then we again do a correction lower in wave C. This is just some study that is suggesting me that this might not be an ideal time to buy the markets right now. Okay, or who knows, that this B wave bounce could just be a dead cat bounce, and we could be ready to go lower in wave C. That doesn't mean that I am overall bearish on the market. That just means that I am quite skeptical about the bullish rally that is going on in the markets, and I would not really like to participate in making any of my bullish positions in Nifty. I would just give it a couple of days or a couple of weeks, till the time the pattern clears out, till the time we get much more evidence, and then from there we could start to take a view towards 25,000, 26,000. Does that mean that my overall wave count, my overall thesis of Nifty going towards all-time high is changed? Absolutely not. I would still like to stick up to this view that in a larger cycle we are heading towards at least 27,000 to 28,000. But in meantime, I would like to revisit all those counts and then make a plan for myself, and just to wait a bit, just a couple of days or a couple of weeks, and let's see what the market really does. What if it just comes down towards, let's say, 23,000 23,500 levels? Fair enough, if it wants to go higher, we'll chase it higher, right? What if it just really goes above, and let's say it breaks above this level of 24,600, then we have to be bullish. But in meantime, I don't want to risk myself holding a falling knife. So this is the entire range where I would not really like to participate in the benchmark indices. Well, in stocks, there's another story, but let's just shift to Bank Nifty. Okay, so Bank Nifty is an outperformer, and we have the same dilemma over here. You did an impulsive move, you did a correction, you are again doing an impulsive move, and then if I want to take a scenario where I really expect that the markets are going to crash, then I just label this as an A wave, this as a B wave, this as a C wave, and then just take this entire correction and then somehow make a very bearish outcome on markets. But I am not very comfortable in making a bearish view and having a bearish view on the finance index, because looking at the overall outperformance they have shown with respect to Nifty, it just doesn't really make sense to be extremely bearish on Nifty Bank. So let's take this possibility that if we were to really bottom in next couple of days, then maybe I would stick to this count that this was just a wave 1, or let's label this as wave A and this as wave B, and this just as wave 1. Okay, let's take it this way. Let's not keep any other alternations out. Let's keep all the alternations out. Okay, so this is a valid case, right? That I am assuming that this is an impulsive move like you did in Nifty, and then this is a corrective move because you did not make a higher high in Bank Nifty, so that led to intermarket divergence, and then you had this drastic fall from 58,500 to 56,500, roughly 2,000 points of fall. So this is one of the ways by which I could say that, yeah, come on, it did an impulsive move, it did an correction, now it is getting ready for another move on the higher side. But when I correlate it to Nifty, it's possible that you may go sideways a bit, like you drop 500 points, 600 points lower from here, and then you again start to pick up from here, and from there Nifty also does that entire sideways correction, and after that Bank Nifty is ready to outperform all of the indices again, taking us towards the highs of 62,000, 63,000. So the point I'm talking is, I'm not really bearish on the markets. I'm just saying that let market take its own time, let it create its own levels, and then we'll see what to do. Okay, so this was my view in Nifty, and this was my view in Bank Nifty. Thank you.